And the reality of stop loss, I know I'm going to get so much hate for this. I absolutely love it too. Is stop losses are people who can't manage their emotions. If you use a stop loss, it is asking some sort of divine intervention to come into your trade and pull you away from the computer because you're not able to click a button on your own accord. It is the most common thing that, I'm streaming every 10 minutes, somebody comes in and says, ha ha ha, this guy has no risk management, right? And it's funny because they're like, "Where's your stop?" And sometimes I'll just drag it randomly on the chart.
Of the smart money concepts traders that you've seen, is the average one out there making money, doing well with it, or are they not making money?
Well,
What's up, guys? Welcome back to another video. This is actually probably my third or fourth time having Chris Hunter, previously known as Maven CEO, still involved in Maven, but also back on the influencer grind. We were just talking a little bit about that. He's sharing some groundbreaking stuff, and I really actually do mean, like, you're sharing some crazy stuff in the trading space, Chris. We're going to talk about it. I'm excited. How you doing, man? Welcome back to the channel. Good to have you back on.
good, man. It's always a pleasure to be with Trader Nick. We've gone back, what's like 5-6 years now, on and off on your streams every once in a while, and it's a pleasure once again.
Yeah.
Different. Every time you have me, I seem to be a different person. Last time you had me, it was an interview about the prop firm. Before that, it was, the guru sort of flashy lifestyle. Now I'm coming back with some real stuff, real good stuff.
Well, you're a worldly guy in the trading space. You've done a little bit of everything, and it's like you said, you spend enough time in the trading space. Of course, you touch on a little bit of everything. But your latest thing that you've been talking about, I've been keeping up with this. You reached out to me, said let's do a podcast, and I was like, all right, let's do it. You've got this new thing called Dumb Money Concepts.
Dumb Money Concepts.
Give us the breakdown. What is Dumb Money Concepts? What's the idea here? I mean, it's got some traction already. You're having fun with it so far. What is this new concept, Dumb Money Concepts?
Yeah, it's the whole idea. The name came from, I was trying to come a spin-off of Smart Money Concepts, basically, because Smart Money Concepts I tried for so long. And back in the day, I was the Hunter FX. I was the guru teaching sort of these smart money concepts things. And the reality is they kind of work. I know a lot of people might argue with me, so I'm not going to be brutal like I used to be and just like make fun of it. But I think they can work, but they're very, very difficult to make work. Like, you'll make like little smidgens of money right here and there. It's on and off. And I started trying to figure out like a way. It's like, okay, it's too complicated. There's this happens here. There's that happens there, right? There's all these different terms and technologies that you need to memorize and then pick and choose which ones are applying at certain time, right? So it's like, there's nothing smart about this, or either that or I'm not smart enough to understand it. You know what I mean?
Yeah.
So I was like, I need something simple. So I started diving down. This actually a couple years ago that I started looking at this. And now that Maven's taken off, I really, really went hard into this now. And I've kind of, given away the ship of Maven to the rest of the company there. And now I've got back into this trading world. And I was like, okay, let's really like brand this, the strategy that I've come up with. And what I basically came up with is a strategy that is only one thing. You literally only need to do one thing. And that one thing is, how does price react to levels? And that's, and based off of if it closes beyond it or fails to close beyond it, I say failure to gain or failure to lose, that's going to tell you where it's going to go next. Because all you need to know is where it's going to go next. Right?
Yeah.
So it is so dumb and simple that you're literally only doing that.
Yeah, and so in the past on Hunter FX, on the YouTube channel that you've got, which we'll have linked in the description for anybody who'd like to check this out, you made this documentary, and it blew up, man. You ruffled some feathers with the ICT stuff, the SMC stuff, which I assume kind of plays a role in the naming, right? The Dumb Money Concepts. This idea that, there's so many traders out there, and I poke fun at it too. Many traders in the trading space do. If you think about it, I've made videos about this concept. If something is so smart money concepts, why is it that every retail trader and their brother knows about it and is watching it and learning it and trying to trade it? Something that's truly quote unquote smart money is, you would think, is more proprietary and more secretive than that. But then you come up with this concept of dumb money concepts, and of course it's kind of a play on words. It's kind of a jokey name, but it does play into what I think, as most traders find in the years of this stuff, simple is just better, right? Keeping it really, really basic almost just trumps 9 times out of 10 the stuff that gets really complicated in terms of, fancy names for price action patterns. And I think a lot of traders get lost in that stuff. I mean, if you think about like a fair value gap and all this, I'm not here, and as you just mentioned, you're not here either, to say that people who trade in that way are completely, lost. There's no chance of making money, but it certainly is marketed as this idea of like this magic sauce trading style. And if you're on the outside and you're not part of the group, then you just don't get it, and you're just a dumb money retail trader. And here you are coming up with a concept called dumb money concepts. I love it.
Let's be dumb, man. The great thing I realized with it is literally everything that smart money concepts, and like the FVGs, the liquidity grabs, all these sort of things, it can all be explained under the same guise of dumb money concepts. Is it targeting a level, right? And that's literally all it is. Like, I don't believe there's liquidity grabs. I don't believe FVGs are like a special certain thing. It's just there's no level there, right? So that's why it drops all the way back down. And
interesting.
All I talk about for levels, by the way, so you guys got kind of the secret sauce here already. Within 5 seconds, you're going to know exactly how I trade. It's the candle bodies. That's it. Untested candle bodies. That's the only thing for levels. And then what I'm doing is, as the price touches it, if it goes past and closes beyond, then perfect. We continue the same direction. And if it fails to close beyond, then we go the other way. Because the whole logic, I'll explain it to you here, is you can't keep trying the same direction. You can't go sideways, first of all. It's either up or down. And if you go up and you fail to make a new high, where do you go? You don't just go up again.
Right.
You obviously have to test the level to the downside, right? And then see the reaction off of that.
So your take on it when it comes to what many traders call liquidity sweeps, you would say that that's kind of not real, that's kind of like a fake idea. So the idea of like a key support. So go more into that, because of course people are going to have questions about that. They're going to get all sorts of, yes, it is liquidity. You are my liquidity. You have all the more toxic end of things. Talk about liquidity grabs for just a second.
It's hilarious. I get that so much because I do a little live streaming on TikTok, and YouTube comments are way better than the TikTok comments, but TikTok every single day I'm in drawdown. They're like, you are the liquidity, and then it always ends up, and people are like, I'll quit trading if you're right now. And it always ends up that they're wrong. It's hilarious. But the reality is, every time you go to a level or a candle body, you attempt to make the high, you attempt to make a new level. And if you fail and close back within, that's a failure to make a new high. So it's not a liquidity hunt, but it's an attempt to continue in the trend, right? Because you will just continue in the trend until you get to a reason to not be in that trend. So as you watch the chart, you keep every single close, you check your bias again. What direction is it going? Okay, we've just failed, so we now must be going the other direction.
Yep.
That's literally it. And the reason why, I might have to show you a chart for this. The reason why there's a level, right, and then it goes beyond it and then hunts it, right, is because there's another level behind. That's all it is, right? And if you look at the higher time frame, probably what's hitting.
That's a fair point. When we talk about this, there's all of this concept, this idea of dumb money concepts, right? For us to really even dive into what is that, why is that worth exploring, we do have to kind of deconstruct the parody, right? The smart money concepts. So I know I've seen your documentary. You definitely have done your research on the inner circle trader, the ICT creator of the smart money concepts. You've talked about the smart money concepts in order to understand it yourself. I think it also adds validity that you yourself have explored in depth the concept of smart money concepts, even admitted that certain people probably can make some money doing that type of trading. I think many people can make money doing all sorts of styles, but you basically kind of came away with it's a bit overhyped. Keeping it simple is the best. And what are your thoughts on like the whole, again, because we have to deconstruct the concept of smart money concepts to bring this around. What are your thoughts on the concept of like there's an algorithm in the markets? Do you think there's anything there? Do you think there is an algorithm we just don't get? Like, what are your thoughts on that?
Yeah, well, there would be no core algorithm. What I've found here is the closest way of how the market works so far. That it's going to adapt over time, and I have pretty much never seen this be wrong. The only time I am wrong sometimes, of course, that's because it is a little bit more complicated because you have to look at all of the different time frames. There's levels on all the different time frames. You have to use the higher candle bodies sometimes. If there might be a monthly level that you've not noticed or something if you're day trading, right? So sometimes you'll still be wrong, but the reality is I've never actually seen this fail, right? There's always you're always following the same trend, and there's different tests, and that's what's great about this is it's always an attempt. It's not a pattern that follows, right? So it's actually kind of impossible for it to be wrong in a sense, because you will attempt to make a new high, and if you fail, you adjust your plan, right? So you being wrong is simply you closing out your trade once the trend has decided it's no longer going to continue anymore.
I was going to ask you next about that in terms of execution and position sizing here. With this concept, let's say you have a key level of support or resistance, and you decide, okay, yeah, I think that this level is going to hold, that we're going to reverse from this area. How do you manage the trade? Do you look to take profits quickly? Do you let winners run? Do you stop out? Do you use stop losses? I know that's another thing we got to talk about, because I know you have an advocate. You have a thought on stop losses. So how do you manage winners and how do you manage losers?
Yeah. So let's. I know. Okay. First of all, I don't use stop losses. I'm gonna let them on a cliffhanger for that one, and we'll talk about the profits first, though.
Yeah.
The take profits is always the next level. It's as simple as that, because what you can do, the great thing, the glory of this is you can always just re-enter. So you're watching the trade live, you're watching the chart live. It's I remember I used to trade smart money concepts. I would go for these 3R setups. I put the stop behind the level. Oftentimes that stop would get wicked out, and then it would go to the take profit, right? Well, the reality is I generally shoot, it's about 1R sort of setups ish, right? And all it is you go to the next level. And then if you gain that level, just re-enter and then go to the next level, right? Occasionally you're going to miss trades, but the reality is you can get in and out, in and out, in and out. But the thing is, if you fail to gain that level, well, you've just closed, and now since you failed to gain, it's going to go in the reverse direction. So you could actually probably short. I wouldn't advise this because the trend on the higher time frame you probably want to be following just for higher probability trades. But the reality is a lot of your setups are zero risk, right? Because you can just re-enter at the same spot, or on the opposite side for stop losses. Actually, I'll say this first. A lot of times how I enter then, right? So we talked about the take profit. How I enter is kind of a scaling enter, right? Because I don't know which level they're for sure going to use. So I might find a zone. I say, hey, there's a level here, there's a level here, there's a level here. And I'm going to enter on all three of them. It's all in one zone. So guys, I'm not advocating just DCAing until you martingale all your funds away, right?
Sure. And
that would be a hilarious podcast, though, as if I came on here with this new methodology and I just taught martingale, right? But the great thing is, okay, so it's very difficult without a chart, but let's say I have 3 trades in a zone, right? And this last one is kind of where my stop would have been using traditional smart money concepts, right?
Sure.
Now, what happens if I enter all 3 and then the close actually closes back down here and I decide I'm wrong? Well, that one's break even. So that last trade is always zero risk. So you always want to be entering where your stop loss area would have been. Now, this brings me into the stop losses. I don't use stop losses, right? I have an area in which if price closes into, I will exit, right? And the reality of stop loss, I know I'm going to get so much hate for this. I absolutely love it too, is stop losses are people who can't manage their emotions. That's the statement. That's the clip right there. If you use a stop loss, it is asking some sort of divine intervention to come into your trade and pull you away from the computer because you're not able to click a button on your own accord, right?
You know, there's a lot there, and I think that when it comes to stop losses, I actually think that a lot of people make the mistake of you know, they I'm trying to say, like, they basically believe that because they have a stop loss, they're just able to manage risk perfectly. But there's so many ways
Yeah.
to manage risk. There's so many
Yeah.
ways, you know, position sizing. You mentioned, like, when you dollar cost average, I would argue that there are ways to enter a trade in multiple legs, multiple positions with small size in a way that actually makes you way less risky than if you take a big old position with a really tight stop. If you get one instance where you get bad slippage, you know, a stop loss is not going to save you, right? Slippage is a thing that can really, you know, mess you up. So small position sizing, scaling in at levels.
Yeah.
I do a little bit of that myself with some forex trading that I do. A lot of it is dollar cost averaging approach,
Yeah.
and it's like, here's the thing I want to get into about the no stop loss concept. When you use no stop loss, if you there are ways to get yourself in a lot of trouble with a no stop loss approach, just like there's ways to get yourself in trouble with a stop loss. There's no easy magical solution here. But with no stop loss, the idea is, okay, what do you have? You don't have a stop loss to get you out of bad positions. How do you stay safe? Well, you size appropriately. It forces you to think more consciously about your sizing. And it also, as you just mentioned, with discipline, with experience, you find levels that nullify your idea, and you can get out like a logical person without necessarily needing to get triggered by, you know, a stop.
Yeah. It is the most common thing that, you know, I'm streaming every 10 minutes. Somebody comes in and says, ha ha ha, this guy has no risk management. Right. And it's funny because, you know, they're like, where's your stop? And sometimes I'll just drag it randomly on the chart and it'll be like a 0.3R setup. Right.
Yeah.
And people go berserk because they're like, you know, this guy has no idea what he's doing. But the reality is it's just there for an oh shit emergency. Wow, the market just blew up and I don't want to blow my account. Right.
It's so interesting to me because people come in and they say, "Oh, no stop loss, no risk management." That's it, you're showing your lack of experience when you say that, because I have strategies that use a stop loss and I also have a strategy that does not. I can tell you that a stop loss is not the only way to have a structured way of trading. The size of your trade, the rules to exit a position. You know, here's a quick example. Let's say you're not using a stop loss. Everybody can picture this in their head. Let's say you have a 20-period moving average and the chart is trending up. Instead of a specific hard sell order to close out, you could just say, if it closes below that moving average, wherever it's at, I'm going to close. There's ways to still have rules to deal with a losing trade, because everybody's going to have them, whether you're using the smartest money concepts in the world or the dumbest money concepts. Like, you're going to have some that are right, you're going to have some that are wrong. But your position sizing, your way of managing that loss, it makes a lot of sense. A lot of huge investors don't use, or even active managers that are, you know, that are trading, don't use stop losses per se, but they use portfolio management, position sizing. You know, there's just more than one way. And when you say like, oh, no stop loss, yeah, go ahead.
They might even hedge, right?
Yes.
Once you get to that scale, there's no point. You're just adding and reducing as things go.
Yes.
And that's kind of the ideology here, but on a much faster pace than, you know, long-term invest. If you think about this, do you use a stop loss when you buy Bitcoin? Do you use a stop loss when you buy, you know, Apple or Tesla?
Right.
No, you just
Exactly.
when you decide that that's not a good investment anymore, you get out.
Exactly. And I love that comparison. Let's compare for a second this concept of dumb money concepts. We're scaling into an active trend that's going on whatever time frame. You know, we're trying this concept. Let's compare that to a portfolio where, like you said, let's say in your portfolio you have some Bitcoin, let's say you have some Apple, you have some Tesla, you have all these things. And as you mentioned, what a lot of active managers are doing is their allocations are changing. They're not necessarily stopping out. They're just allocating differently, scaling in, scaling out of things. And that is still risk management, right? That's just different than what I guess the retail crowd believes it to be.
Yeah, and that's not day trading. Let's be real though, but it's a very similar aspect. It's just
Sure.
I sit in front of the chart for an hour in the morning, and instead of, you know, over the course of months and years, right?
Yeah. Exactly. Well, so here's the other thing I want to ask you about too, because so many traders are so interested in this idea of, I want to trade like the banks, trade like institutions, trade, like I'm, some holier than thou trader that knows what's going to happen next because I know what the banks are going to do. There's all this this fascination with that. But here you come with completely flipping on its head this idea of no tight stop loss. We're going to scale in, scale out. We don't know for sure what levels are going to hold. We just manage the positions appropriately so that we don't get wrecked on a bad move. I like that so much because it completely re-engineers the concepts that most traders are trying to employ and losing money with. You also have a really unique perspective that we have to dive into, which is you have in the past, you've started a successful prop firm. You've stepped a little bit away from it. You're still involved, but you've stepped away from it. But you clearly have a ton of experience looking at the performance and traits and habits of traders. What has that taught you when coming up with this concept of dumb money concepts?
Yeah, that's a really interesting question. Actually, I wasn't expecting that one, but I do a lot of interviews with successful traders. That's part of what my job is at Maven now, is basically just being the face of the company. All the operations are too much math for me at this point. So, so I just kind of chat with people, and some of the best traders. Well, first of all, the best trader that we currently have trading, he's gotten crazy amounts of payouts. He does the dumb, I can't say what it is, but it's the dumbest, most simple thing. And it has there's no pattern, there's no methodology. It's just, he'll buy when he sees this silly little thing, right?
Yeah.
And then he just scalps it to the next level. And that's it. It's very similar to what I do, basically. But the best traders, what they do is they get some sort of fundamental bias. They determine what the trend is going to be overall, and then they basically just follow it. They just kind of use like some sort of support resistance, and then they wait for a pullback. And there's no hard set strategy.
Yeah.
All of these guys, it sounds weird to interview them sometimes. It's because it's one of the guys I remember, he said, all I do is I look at the previous 4-hour candle when I wake up, and then I wait for a pullback, and then I enter and then let it go, right? And because they don't have these hard set rules, they can guide their emotions effectively, right? And that's one of the major things that kind of separates, and this will be kind of the conclusion here, separates the people who are profitable long-term and the people who kind of have a hit or miss month, right? Is that they know how to read their own emotions, right? So they see a chart and they say, hey, I don't know what to do, I'm going to walk away. Or they come into the chart, they're in a trade, and they say, hey, this is not doing what I want it to do, so I'm going to get out. Rather than just keep hoping that each trade is going to work. Hey, I see a pattern, I'm going to enter immediately, right?
So correct me if I'm wrong, but it sounds like, and I actually subscribe to this quite a bit, so I'm really curious if this is what you mean. It sounds like some of the best traders that you've interviewed and your own experience, clearly this is something that you've done so far. It seems like the best traders you've interviewed are operating a lot off of experience, off of discipline, and off of just pure intuition in the markets. Is that correct?
Yeah, it's pretty much is the best traders are trading off of trend-based intuition.
Love it.
Right?
Love it.
I've made it a little bit more technical so that I don't have to I'm not a super intuitive sort of guy. But that's essentially what they're doing, is they're just following trends, right? And my years of experience with trading, I've been over a decade at this point, is what I've seen is patterns and strategies don't work. Because the reality is, if some sort of pattern worked, let's say cup and handle, for example, right? Well, every time a cup and handle appeared, some sort of bot would pick it up and basically arbitrage it until it didn't work anymore. They would take all of the profitable volume, all of it, right? Yep. And then there would be none left for you. So the only thing that can work is following the trend and then deciding to get out, because that's how it works with investments, right?
Yep.
They say, you just buy the stock when it's low, sell it when it's high, boom, you've made some money.
I love this. I love this so much because you know what? It's so true to the name, Dumb Money Concepts. You would think as a new trader, there are going to be people who hear this and they're going to get frustrated by this topic. What do you mean you can't, Hunter's saying you can't take a rule set and apply it to the markets and make money? But you've illustrated it there perfectly. And again, it shows also your experience in the prop firm world. You've probably had to deal with people who are doing the arbitrage stuff, which is, gimmicky at best. And you have people that you've interviewed, you've seen all this experience, you see what the profitable traders are doing, you see what the losing traders are doing. I'm going to ask you more about that in a second. But you've got all of this in front of you and you're saying, look, if there was a simple rule set that you could just program into the market, somebody would have already done that and completely exploited the edge that's there. Where's the edge? The edge is in the person. It's in their intuition, their experience, and spotting those trends and knowing how to not necessarily 100% mechanically operate, but rather it's a mix of an art and a science is what it sounds like you're saying. It's a little bit of science, a little bit of, here's your levels, mark them up, but you don't know what's going to work perfectly. So the art to it is, here's your entries, here's your managing of the position, right?
And you scale in and you can scale out if you want to. And then that way you never have to be accurate. The great thing about that too is, it's going to really increase your hit rate. That's why I like the low R setups. Right. That's why I like having multiple entries because I love having a 90% win rate. You know what I mean? 90% of the days I'm going to make money. I know that for sure. 10% of the days I'm going to lose a little bit more than I wanted to, but that still ends up working to be profitable, right? In the long run.
I love it. And so I have another question for you too, because again, you have the reason you, I think, bring so much kind of presence to this type of conversation is you're not just saying dumb money concepts just to spite people who trade SMC. You came out right off the mic and said there are people who do SMC, they make money, and that's fine. But you have this presence of, okay, you've run a prop firm, you've spoken to so many traders, you've done this for so many years. I too have as well, and I'm resonating with a lot of the stuff that you're saying. Intuition is a really powerful force for traders. I actually at one point had a conversation with Tory Trades, and we talked just at length about how important it is just to stare at charts for so long. There's something that happens to your brain. You start recognizing patterns, and it's not something that is easily programmable. But the next thing I want to ask you about is your experience with interviewing traders, but also seeing the stats on traders. Guys in the audience, if you are not familiar, Hunter is involved with Maven, which is a pretty notorious prop firm in the trading space. And so clearly you have a ton of data too. Like this is not like, that's why it's so funny. You call it dumb money concepts and you've got all this, intelligence behind you, all this stuff that you're doing, right? You've got stats on traders, you've interviewed traders. So the stats that you've seen, and maybe the concept I want to ask you about is of the smart money concepts traders that you've seen, is the average one out there making money, doing well with it, or are they not making money?
Well, I can't tell you which strategies for sure because I don't know, right? Which ones make money and which ones don't. All I can tell you is the interviews that I have, this is generally the trend that I sort of feel, right? Overall, traders lose money, right? That's we know that in the industry already. What I can give you with that is something kind of interesting is when markets trend, traders make more money, right? So you can use that to your advantage in basically literally what I just said, right? Something I had noticed, I was just curious. I was like, okay, how are our profits, traders' profits adjusting based off of what the charts are doing, right? And I was kind of trying to figure things out. And an interesting thing is, if something is just trending, they make more money, right? And especially if it's trending the same way that it was kind of last week, right? If it's volatile, what they try to do is buy and sell the levels. And then when those levels don't hold anymore, everyone blows their account.
Interesting.
Right? So it's very much interesting is it seems like the attention span of your average trader is 1 week ago. So they're looking at, okay, it's ranging right now, so I'm going to try to range it. Or if it's trending, they're just going to buy and hold, right? So whenever it doesn't do what it did last week, causes them a problem.
Very interesting. Yeah, no, I mean that makes a lot of sense, right? If you're the average, I'm just trying to make a guess of the average trader. The average trader out there is trying to trade with the trend. They're trying to buy pullbacks. Maybe they're using some trend lines. Maybe they're using Fibonacci, whatever. And they're using a 3-to-1 risk to reward. It would make sense that during times where there's just good follow through in the market, those traders might perform a little bit better than trying to catch the reversals per se. So that's really interesting. I mean, that's the thing. Do you have any other kind of common things that you've recognized with traders who are obviously who have been trading on the platform? What can you share with us? Anything else?
I was trying to just remember what I was going to say there. My take on why that is. Well, okay, yeah. So here's my take on why I think that's happening. Is because there's so many options for you to trade in the market, right? So the same thing with SMC. There's a couple different ideas behind SMC, right? And there's not just one thing you do every single day and make sure that works every single day, right? Is you'll see, okay, there's an FEG, but you'll also see a liquidity sweep. So which one do you choose, right? Which one is more important, right? So this time they're going to try that strategy, right? And it's all under the guise of SMC, right? So I'm an SMC trader, but the reality is you're doing 2 or 3 or 4 different things at once. You're not actually doing one thing. You're smart guy. You're a smart trader, right? So because you have all these tools in your kit, right? And so it'll work one day. The next day you'll come back. Oh, it won't work. Okay, that must have been wrong. So tomorrow you come back and say, oh, I'm going to choose the liquidity side, right? And then, oh, boom, that one's wrong. Okay, you jump to the next thing. And it's still all under this same toolkit. So you're like, if only yesterday. There's always a reason why you're going to do better tomorrow.
You know what the problem is? I hate to compare it to this, but it's like when somebody who's getting scammed doesn't want to admit that they're getting scammed. And I'm not, and I want to be careful saying that, because I'm not saying everybody who trades SMC is, getting scammed or completely naive either. But I'm just comparing it to this concept of like, you can play this denial bias where, like you're saying, you change which model, which thing you're doing based on the chart that you're looking at and saying, oh, from now on, I'm only trading liquidity sweeps because that's what's been working. But then when the market changes nature, you switch to the other models that work in that environment. And the problem is you're playing this game, you're juggling styles and strategies. And that goes back to the oldest trick in the book, which is the, Andrew Lockwood video like 10 years ago, the Forex cycle of doom. I actually talked to that guy at one point. If you've seen that video, it's like a famous Forex video on YouTube. It's the Forex cycle of doom, where people just, they do a strategy and then it stops working and they switch to something else. And then, they just keep doing that and losing money. And people are falling into the same pitfall with smart money concepts. And that's why I think this concept that you've been talking about, this dumb money concepts that you're passionate about sharing here recently, is doing something different. It's saying, stop the nonsense, stop chasing your tail with this stuff, identify key zones, manage risk appropriately, show when you're wrong, and show up and do the same thing every day. It seems to be pretty repeatable what you're talking about doing, and we're not just
every hour, man.
Yeah.
Every hour there's a new candle that closes.
Yes.
So you can repeat it every hour, and it'll work no matter where, right? And that's the great thing.
It's just really important, I think, that traders hear that, because you're talking about this thing where you're saying, I'm not a brilliant genius that knows what the market's going to do every single second of the day. And I'm not able to tell you exactly what smart money is doing. That's my biggest thing. And I think a lot of people's biggest issue with that group of traders is that they act like they know something the rest of the trading community doesn't, that they've got, the inside scoop on what the banks are doing. And really what they're doing is they're fooling themselves into thinking the market is more predictable than it really is. The market is not always predictable. And you talking about like averaging in at different key levels is a way of expressing that in a way where you say, look, I don't know everything, but I'm gonna work with this position. I'm gonna see if I can work it out. And if I can't, I'll manage risk appropriately. I'll cut the trade.
It's the reality of the trading industry is very much the Dunning-Kruger effect, if you're familiar with this, where you start off and you think you're dumb, right? And you're trading based off intuition. And then you get all this information, you think you're the smartest, until you start getting more information, and now you think you're dumb again, right? And it's reality. It's the
So
same thing.
true.
It's inversely correlated to how much money you're making, right?
Yeah.
Because beginners actually make more money than intermediates because they're just simply, hey, it's going up, I'm going to buy.
Yeah.
Right. And then that's funny is because this was my cycle exactly is I went a beginner, I started making some money, crypto sort of stuff, right? Started teaching sort of these like technical things, started not making as much money. I started losing money now, right?
Yep.
And now that I'm trading completely off of intuition again, well, not completely off of intuition, but there's like a little, making a lot of money again, right?
Wow. I mean, we've gone back for years. We've done podcasts and stuff together, and that's actually been a similar experience for myself too. Over the years, you're so right about what you just said about you start out in the trading world, you think you know everything, or maybe actually you start out, you know nothing, and you're like, well, the chart seems to be going up, I'm going to just trade with that chart. And then you get smart, quote unquote, and you start
smart
thinking,
money.
oh, I'm gonna call the tops, and oh, they're faking us out here. And it's almost like with that extra little bit of knowledge, you actually become really stupid. You start thinking you know something that you don't. And then, I've come back full circle years and years later. I trade momentum. Like I literally just identify a chart that's moving up or moving down. And as long as I like I'm a, fundamental junkie. I like looking at macroeconomic stuff and that sort of stuff. So I guess, that's a little, but that's not technical charts, right? So that's more, real world stuff. But when I look at a chart and it's just trending up, it's like, I just want to join that move. I'm not smarter than everyone else. I'm just going to look to join it at key levels and cut the trade if it's wrong. And it's like, that was full circle to where I started. I started out just saying that, hey, it's going up. And then you start saying, oh, I want to carve out reversals. And then I heard about, Wyckoff Springs, which is another, same idea, right? I went down that rabbit hole early in the trading world.
So we're literally just going back to being dumb, and then we're going to make more money.
Dumb money concepts.
I'm going to give, I think I can kind of sort of wrap up with a concept here that people can use without even knowing how I trade, without even knowing dumb money concepts, because you don't need to know how to identify the levels, even if you just do this. The larger the candle body, right? This is largely to do with momentum with YouTube. The larger the candle body, the more likely it's going to continue in the same direction, okay?
Yeah.
And the larger the wick, the more likely it's going to continue in the reverse direction, right? And that's basically how I trade, revolving around levels, okay?
Yeah.
But if you don't know how to identify levels, which is for some reason the most difficult part of this, you can use literally that and make money.
I have another challenge to add for the community as well that's listening. Show up on your tradingview.com, scroll back, hit the replay function, and just start it at a random point. Take a random entry, long or short, mark up the charts at key levels like Chris, like you're talking about here. Yeah. Mark up all your levels and trade those levels just based off pure intuition. You might not be very good at first, but if you keep doing that over and over and over, something's going to start to click, and you'll see you can scale in, scale out. Practice doing that on a demo, practice doing it in your TradingView replay or whatever, and you'll see it's amazing what you're talking about, Hunter. The high win rate, as long as you're managing your risk, you focus less on getting picture perfect entries, and you focus more on just working with positions, scaling in, scaling out, and managing risk. And I think that would change a lot of people's perspective on trying to be so picture perfect with, being smart money, quote unquote, and rather just go the dumb money route. Yeah,
that's a great exercise. I like that.
Yep. Well, I want to thank you for coming on as always. This is, I don't even know, probably podcast number 5 or 4 or something that we've done, but we'll certainly do another one in the future.
Our very first one was you brought me on because I made fun of one of your videos.
I remember.
And you confronted me.
Yep. And then we realized we're kind of on the same page with a lot of stuff. So it worked out in the end. So how can people, what's the best way to find you? Because I know there's going to be people who want to do 2 things, Chris. They either want to attack you, or they want to follow and learn more from you. How can they find you?
All right, so my PO box, in case you want to attack me with right. So my YouTube is now Hunter Maven, no longer Hunter FX. We're under the Maven platform now.
Gotcha.
And you can just YouTube dumb money concepts. So I have a full course for free. By the way, guys, I will never charge you for any. I don't do the signals. I don't do the courses. Nothing ever in the future. I'm just doing this now because I've been given something that works very, very well, and I'd love to share it. And all I want is, you know, when you guys start making money too, give me a little tag. Hey, thanks, Hunter. Dumb Money Concepts. I want this to go viral. I want it to go head to head with Smart. So it's just a red versus blue sort of thing, right? And I think that'd be a lot of fun for the industry.
I love it. Well, we'll link everything down in the description, guys. Make sure to go check them out. Hunter Maven on YouTube. My bad. Yeah. I'm used to the old days.
But, I'm not FX anymore.
Yep, new and improved.
That's a different character. That's an insane character.
All right. Well, we'll definitely have to do it again soon. Thank you for coming on, man, and we'll see you on the next one.
Okay, ciao.
Hey traders, I wanted to let you know that if you're not already in our Telegram channel, it is completely free to join, and we just started a new series in the Telegram channel. It is our Chart of the Day series. We're dropping regular videos, extra bonus clips from my analysis into the Telegram channel. Like, for example, we just did a Chart of the Day, US oil. If you're not already in the Telegram, completely free to join. There's a link in the description. Make sure to join us for more free content there.